Hello, good evening, traders. Welcome to today's live session. We are back here again on our weekly trading digest. Welcome. Welcome. Okay. Hello. Yeah, good evening. Yeah, if you can hear me loud and clear, let me know, please. Just put in the chats, let me know you can hear me loud and clear. Okay, so we'll crack on straight away. Okay, here we got DSY. So those of us who trade all the dollar pairs, it's always important to always very important to see what's happening on the DSY. Very important, because this will more or less save you from a lot of unnecessary losses that could occur without you knowing what is happening here. Okay, great. You can hear me loud and clear. That's good. Okay, so that's good. All right, so we have here the DSY. So doing a top-down analysis on the DSY, just started on the weekly. So on the weekly, we can see how price was over here, was more or less consolidating. Over here, you can see how price was more or less consolidating. Come on. Why is my thing? Okay. All right. Yeah, you can see how price has been consolidating here, and then from here it broke above and then shut down. All right, so that's just on the side, but we are more interested in what is happening on this side. What is happening at the recent price action here. So with that said, we need to, looking at this, we can find out why price came all the way down here and then stopped here. So that's what I always say. If you look left, structure always leaves a clue. When you look left. So if we go onto the left hand side, we could see that there was some price action here before the up move. So over here we can see that there was this. If we go down on the daily, that will be much clearer. Yeah, so we can see that there was this imbalance area here. We had a breakup structure above here. So before this, we had price pushing up strongly, indicating that it wants to go up. So whenever price stays in an area, like more or less consolidates, so this is a daily time frame, and if it wants to move from that area, it moves with power, because that is the area of accumulation where orders are being built by the big financial institutions. The banks and hedge funds and other big players. This is the area they accumulate orders. So once they accumulate enough of their orders, or most of the time they are not able to accumulate all of them, so they will move away and come back for the remaining ones. So once they accumulate enough and they want to make a move, the move most of the time will cause a fair value gap, or what is called the imbalance. So we can see the imbalance that was left here, and then below this imbalance we have a demand zone. So we need to extend this to the right. Okay, let's see where we can find it. Okay, yeah, so this is the demand zone. Above it is the imbalance we have on DSY. That is where price currently, let me go back here to extend this thing. Yep. Right here. So this is on the weekly. So this is the reason why price tapped in here and then pushed up again. So if we go down to the daily time frame, you can see that over here, as price moved away from here, we had a break of structure. Right here. We had a break of structure right here. So that break of structure, we had the origin. Okay, so we put it as a change of character. So that's the first push up after this. So this is we call it change of character or market structure shift. So we had this break here. So and then below this break is this this imbalance we can identify here. So if you look at it properly, let me enlarge this a little bit so that to be clear. If we look at it, we can identify that there is this imbalance on the left from here, a small tiny one. That's an imbalance on the left, and then we have imbalance on the right. So this is what is known as balanced price range. So we have this happening here after we had this tapping, price filling this imbalance here and tapping into demand, pushing up. So this is on the daily time frame. So from here we can identify that the next area that we could be targeting, first of all, we can target this high area. So from here the market is now closed. So from this point on, we expect that price will move away, giving us another imbalance from this point on as it makes its way up. So if we get an imbalance from here, that's it tells us that there's going to be a continuation push up to the upside. So we've taken this area of liquidity. So the next plan is to, or the next step is to take the liquidity above here and further move up. So yeah, this is the daily. So we will go on. So the plan is we can expect price pushing up. So the targets we can identify here. We can see that here there's another imbalance that was created here. So there was another imbalance here. So this could be the next target on DSY. So on DSY. So if we go down to 4-hour to further refine it, so we will see that yeah, so we on the 4-hour we can also identify this large area of imbalance here that we expect price to fill and then probably push above this area. So on the 4-hour we can target here first. This could be your first targets, but first of all we will expect a push up, creating an imbalance along the way as it moves from this area. So if we go onto the for instance on Euro USD, where are you, we'll have exact opposite of this, exact opposite of what we are seeing. I think I did some markings here already. Okay, so this is Euro USD. This is exact opposite of what we were looking at on DSY, because that's how the dollar pairs kind of move. So if the DSY is going downwards, if you come to a pair like Euro USD, you have it going up, as we can see from here. So from this point on, with Euro USD, the anticipation is a displacement, or we have a fair value gap created as it moves away from here. The targets, the first target, as I said, this area to fill here. From this point on, the ultimate, if you are a swing trader, the ultimate could be down here, sweeping all this liquidity sitting here. So the ultimate area could be this area. But if you're a day trader, your first target should be here. Okay, so if we go further down the line, so as I said, we most of the time, or not, we usually use the higher time frame. You can start from the monthly, weekly, daily, 4-hour to find out the direction that you want to be trading. That will give you the insight into where you are most likely you should be trading or taking your trades towards. So as we can see on here from the weekly analysis we did, so if we go back on the weekly on the dollar, Euro USD, let's get this. Okay, so just using the DSY as an example, that we need to be checking on the DSY, what the DSY is doing before we take any trade on any dollar pair. That will help us to get our bias right, or the direction that we want to be trading right. So as we can see on the weekly on the Euro USD, it's on an uptrend, but we can see that it got to this point and then kind of pushed down again. So if we did the same thing, do the same thing as we did on the DSY, we can see that from this point on, if we put this here, we can identify this area of imbalance. This area of imbalance that was created. So that's where price is tapping in from. That's where price is tapping in from. Okay. So this is Euro USD. We'll go to our usual gold. We'll go to gold and then we'll do some analysis there and see what we are likely to face this coming week. Okay, so we have here on the let me clear this a little bit. Let's see if I can. Yeah, so we have on here the weekly time frame that's been bullish, and then currently it's consolidating at this point on. This is what we call a accumulation point. So gold is currently in this accumulation point where if it wants to turn around to the downside, we can identify that it has created this equal highs here. Oops. Sorry. Let's hide again. Okay. So we can identify that gold has created this equal highs above here. So before we expect, or we want, before we kind of start trading for sales, we want to see a liquidity sweep above here. We want to see price taking out all the liquidity above here, above these highs. So that is when we will find that the big financial institutions, they will first of all buy to sell. So that is what is also called manipulation. So they will buy to clear all the liquidity here, making you think, oh, it's continuing the uptrend, and then all of a sudden we have a drop. So once we have a drop, we come back to test this area, then it continues from there. In the same vein, we are also creating equal lows here. So if it wants to continue the uptrend that it has been in from this area of accumulation, we could expect a sell to buy. When I say sell to buy, what it all means is these big financial institutions, they have big orders they want to buy, or they want to sell or put into the markets. So with that, they can't do it all at one go, so they will do it in bits. So for instance, if they want to buy the market at the end of the day, they will do it in bits. For instance, some traders will think, oh, it's going to sell from here, so they will sell from here, and the big players will take the order, buy it from this point, keep on buying, accumulating their orders from this point, accumulating. So if they've finally gotten enough of their orders, for instance, they want to get 1 million worth of orders, they've been buying it in small chunks, 100,000, 200,000, 100,000, 200, until they are close to their targets. So let's say they get almost close to left with maybe 200,000 for them to finish with 1 million orders that they anticipated to get, or they wanted to get in the total order block that they wanted. So from that point, they will just they will, first of all, if they will just try to put in a sell from here, they'll put in a sell from here, clearing all this liquidity. So some people will think, oh, that's the time for a downtrend. No. And then from that point, they will just turn around and then push up, because before they take that buy, that big buy, hit it hard, they'll first of all sell to manipulate and clear all this liquidity down here before they hit the big buy to take the trade to the next level. So we always have to wait for that. That is where we anticipate to enter our trades. We are following the footsteps of the big players. So we have to read the market structure and know the exact thing or the likely thing they are planning to do. So if we have a sweep of liquidity, and then price gives us indication of going up, we join the flow. So before they take this buy, they'll first of all sell from here, clearing all the liquidity here. So the liquidity is more or less the fuel that gives them the power to push up, or to, because the thing is, once you put in, like for instance, if those who got involved here put in a buy order, they will put a sell stop here, or they put their stop loss down here. When you buy here, you put your stop loss down here. So if the big player sells from here, clearing all this liquidity, they are buying from you. That's your stop loss you've placed there. It's more or less opposite of what you put in initially. So if you put in a buy, you put in a stop loss below. So you sell your position. So they will come down here, clear all the liquidity, and then that gives them the energy to push up to the next level. So they more or less sell to buy. So once they sell from here, then they clear all the liquidity, gives them the energy to move to the next level. So what I'm saying is, we need to always look out for these. We need to always look out for this before we take a trade. So we don't just get into the trade in a mid-price range. It's always a good idea to take the trade from this area of liquidity after we've identified that there has been a sweep of liquidity. Then we push on from there. Okay, so let's continue our analysis. So this is gold weekly time frame. So we can see that last week we had a push up in the upside. At the same time, we are still in the accumulation zone. So we have to watch out on how we play it from this point on. So I said, we've identified equal highs, equal lows. So there's more likely there's going to be a sweep of liquidity either to the upside or downside. Then we'll take it from there. So if we go on the daily too, it's been bullish, but we have these equal highs here. As I said, if we're going to turn around to go down, we expect a sweep of this liquidity above here for the push down. So we want to see price doing that, clearing the liquidity here first, and then we push down. So we can identify that the daily is in an uptrend as well, and then we have this key level here, this area that price has been stopping, and that's why we're saying that we expect price to break above or clear the liquidity here. If it's going to go down, then we'll take it from there. 4 hour time frame, go down to the 4 hour. So on the 4 hour time frame, we had this imbalance here. We had this imbalance right here. Oops, okay. I think I've already marked this area. So putting that just brought back all the markings, the old markings I've done on it. Okay, so just using that explanation, we have this imbalance here that we kind of have price tapping into it, closed the imbalance or balanced it. We have it balanced more or less. So as we can see, there's this imbalance on the right, as we can see. So if I talk of imbalance, it's just a 3 candle pattern or 3 candle formation. Let me quickly go through that if there are some new people here. So imbalance is more or less a 3 candle formation that we identify on the charts. So with this 3 candle formation, we have this, we say a bullish run. So we have the first candle being this one, the second one, and then the third candle. So this, as we can see, is the full-bodied candle. So normally you have wicks. The candles will create wicks. So this first candle pushed up, opened here, pushed up, sorry, it's opened below here, pushed down here, and then made its way all the way up here, and then pulled back a bit and closed here. The second candle opened here, and then so we have this wick which left here, telling us that first of all price came to this level, and then we have the second candle here as well, which probably would have made a bit of push down or all the way down here, and then maybe somewhere here. We have the third candle also opening and having a push down to this level and push up and close here. So what we are referring to as a fair value gap or imbalance is this gap here between the wicks. You can see that these candles did not trade into each other. There's this gap here. So if I should mark this area, the gap that we are referring to is from the wick, the high of the first candle, to the low of the third candle. So this now becomes the imbalance area we are referring to. So it's a 3 candle pattern that we identify on the charts all the time. So that's what is referred to as the imbalance. Okay, so let's clear this and then we continue what we're going on. Let's clear this. Okay. As I continue, if you have any question, you can also put in the chats as we go along. Okay. So we're looking at the imbalance on the right, on the left, and the imbalance on the left. So this is what is called the balance price range, and that is where gold is reacting from now. This is the 4-hour time frame. That is where gold is reacting from now. And then the whole of let's see. So that's the imbalance on the left. So the imbalance on the right also will be from here to there. So we have the first candle, second candle, and the third candle. So this is the low of the first candle coming down, the high of the third candle here. So that gives us the balance price range. That is where price is kind of holding or being rejected from there. So above this area, we kind of have a balanced price range. It's all balanced. It's a balanced price. It's all balanced up here. So I don't see on the 4-hour. I'm not seeing any fair value gap here, but I think there is on the lower time frame. I think there is, but if there is, if we go to 1 hour, let's see. My chart is loaded with markings. I think I have to delete some of these to make it clear. Loaded with old markings that has already been mitigated. These ones, we don't need them. Okay, so I'll leave these ones because these ones are pending. These are pending areas that we expect price to travel into them. Okay, so this is what we have here on the 1 hour time frame. Yes, we can identify this imbalance right here. So that's what it's been filled or not fully filled. We still have so on the 1 hour time frame, we can mark it from here. I want to, so on the 1 hour time frame, if I should remark this area, so the area we are referring to is this candle here. That's the first candle, second candle, and the third candle. So from here to there we have an imbalance, so it all falls within the balance price range we marked earlier on. So so above here we don't have anything to cause price to be attracted to. So apart from the equal highs that it's created here, that we identified on the higher time frame, that we at least expect price, if it's want to turn round for sales, to sweep the liquidity above here before it goes on that journey we talked about earlier on. So yeah, so on this is the price action on on Friday, which I wasn't much more or less interested in because it was kind of consolidated. So on my Telegram community, I said for what I'm not seeing anything interesting. So on Friday I literally didn't take any trade on gold. But before then on Monday, I think we took this sell on Monday. We had this sales on Monday. Let's see. So was this Monday or Tuesday? So this is Tuesday. This is Tuesday, yeah. So we had this trade on Tuesday where I saw this move push down, and then we had this break of structure here. So the entry was here, and then we had a nice push to these levels, as I called it, a nice breakfast for the morning. So this happened during the London session. So more or less this whole thing, Monday, so Sunday. So if we look at this, we had, this is Sunday. So price doing this here. We had during the Asian session. This was the Asian session. So as the Asian session started, we kind of moved up, came down. So this was the high of the Asian session, and then during the afternoon, we had the US session or New York session clearing the high and then sold off. So we had the New York session clearing the high of Asia and then selling off. So that is another opportunity. We'll look into this another day, but currently let's go through the what we expect this week on the gold. So yeah, so this is another trade we took last week. Yeah, so I think we did about 3 trades: Tuesday, Wednesday, Thursday, and then on Friday I took it off. We had some nice moves where we traded. Some of my members also took this buy from here. After we did the morning session with this trade here, and then this was another trade we took. From here to this low. Okay, so that's on gold. That's what we did last week. So currently this is gold USD. As we had a look at what the dollar index or the DSY is doing, our expectation is for the DSY to push up. If we have another look at it, so this is the DSY, and then what we anticipate happening is if we have a push up from here, this could be the first target here. So if the DSY is going up, that means gold might be going down. So this is right opposite. So it's more or less more or less pairing the DSY with gold. So gold DSY. So if the DSY is going up, that means gold might be going down. So we have this on the DSY, as we have also this big area to be filled. We have all this big area to be filled. We have this big area to be filled. So this coming week, it could happen. This is on the 1 hour. It could happen that this gets filled. So as this gets filled on the DSY, we expect gold to be pushing down as well. So that's that. We expect gold to be pushing down as well. So let's go back on gold. So already we are in this area of balanced price range where most likely we could get a big rejection from here. So if gold is going to push down from here, we'll first of all we should expect to see an imbalance of fair value gap created here, beginning the down move. So if we have a break of structure, so this is the recent low we have here. So if we have something like this, we expect price to push back to test this area and then further push down. So what we're looking at on the DSY, we saw the big area on the DSY. On gold as well, we have this same big area down here. So our anticipation is if DSY is going to go up, we also have this pending zone on gold that we anticipate to be filled. Yeah, so that is the take on gold for this coming week. That's the take on gold for this coming week. So let's be on our lookout. We always want to see what is happening on the recent price action. We want to see what price is doing at the moment, what price is doing, and then we take our trade based on that. So first of all, we can see that even here, you can see that there's equal highs created here. So before even sales are going to take place, we can expect the overall aim is for price. We expect price to clear the liquidity above here, as we identified that this is an equal high zone that we might have price, if it's going to go down from this point, clear the liquidity above here before coming down to do the sales. So this is the kind of thing we are looking into, or we are expecting. So if price gives us this this liquidity sweep here, which we identify on the higher time frame, so we can see that there's equal highs here, and then if we get this liquidity sweep here, that will be good. And then from there on, we look out for an entry setup, take it to the downside for all these pending areas to be cleared. So we can also identify there's also liquidity sitting here. So we might have the big financial institutions or the banks, the big players, doing a buy to sell. So they'll buy from here, clear the liquidity above here, then sell from there. So buy to sell, because they want to go down. So if they want to go down, do some sales, they will first of all buy to clear liquidity and then sell from there. It's the same thing that happens over and over again. The same thing that happens over and over again. So for instance, here we have a very good example of buy to sell. So we have this. Let me pick this tool. We have this liquidity zone here where price cleared. First of all, they bought from here to this area where it's also an area of imbalance that got filled. So this is more or less a correction. This is a correction that was happening from this impulse move that broke this structure. From this impulse move that broke this structure. So this was the correction, trading back to fill the imbalances here, and then from there they sold from here, even though the main aim was for them to buy. So this whole area was accumulation, sold from here, and then clearing out any liquidity resting here. And then if we look to the left, we can see that there was also liquidity resting here. So they cleared all this liquidity that we were waiting for. So these areas were areas that was also pending that we're waiting for, that got cleared. I think last week this liquidity area got cleared. So we had a pending area, just as we have a pending area here on this area. So this got cleared. This got cleared, and then we had this push up. So this is what I'm referring to as the bought from here, fill these imbalances, and then they sold to clear the liquidity. Then the buy began from here. So anytime they want to move to the opposite side, they will do the opposite. So if they want to buy, they will first of all sell to clear liquidity before the buy begins. If they want to sell, they will buy to sell. Okay, I hope that is clear. Okay, so again, I think I was explaining to one of my people that I prefer taking trades from the second leg of a move. So we had this push up here, and then this push up, we had another impulse move down here. So this impulse move broke this structure. It broke this structure here. So this in itself is a leg, first leg. So after the first leg, we have a retracement filling the imbalances along here, and then it began to push down again. So this in itself became the failure swing. It was unable to beat the previous record here. So whenever I see this on the charts that this has happened, a failure swing where I have an indication of price turning around going up, this is where I'm most likely to get myself into a trade from here. So from here, I'll either go on the lower time frame, the 15 minutes, 5 minutes, to look for the right place to get into the trade. So I say again, I prefer to take the trade from the second leg. So this is the first leg, retracement. Second leg failed to beat the previous record, giving me a more high probability area to get into the trade. So this is where I prefer to take the trade from, or after I see a liquidity sweep. So after this liquidity sweep, I can take the trade after I see the liquidity sweep. That on the left, there's been a sweep of liquidity. As we can see, this low price swept below it, clearing all the liquidity that was resting here. and then before it's made its move to this area. So it's the same concept we've been talking about, that we identify these equal highs here. So we saying that before we most likely going to turn around for much more bigger sales, we could expect price to sweep liquidity above, and then we go on for the sales. So this is the kind of scenarios that we expect on gold coming this week. So I hope this is clear. I hope this is clear enough. So we expect a liquidity sweep in some form before a sell-off, or it could happen that price will just, if it wants to continue the uptrend, it could happen that price will just make its way, creating more imbalances along the way. So creating imbalances along the way. Yes, so we could have price moving from here. Why is my path to not responding? Could have price moving from here, clearing all this liquidity. So this is a zone that we've marked on the higher time frame, coming back for retest and then pushing up. So these are all scenarios that we could expect coming this week to happen. But again, we are not forcing anything that we want to happen on the trade. We are only interested in trading what we see. So what price gives us, that's what we're going to follow to trade. So if we see a break of structure, currently we look for the origin of that break of structure, we look for any fair value gap, and then we take it from there. I hope that is clear. So that is what we kind of anticipate happening on gold this week. So those in my Telegram group, if I see anything, I post it there. Just as we enjoyed last week. So if anything comes up, or if any member has anything, that's where they put it. So yeah, that's how we go about it. So let's look at another pair. Maybe we go for NAS. Let's see what is happening on NAS. Guys, I hope the analysis we done there is clear enough. So this is on NAS. Let's start from the weekly, I suppose. Weekly. So on the weekly on NAS, we can see a bullish run where we have almost bullish engulfing candle here. So that's what the weekly is telling us, that we are bullish. Weekly, monthly, just quick into monthly too is telling us we are bullish. Weekly bullish. Daily, yes, we are. It's telling us bullish as well. So once we identify this, so this on NAS, I think this is the all-time high on NAS. If we go back on the monthly, if we look on the left, there is no data on the left showing us or telling us that NAS has ever been this high. So this is the all-time high. So we don't have any data on the left on the monthly to tell us. So this is an area we targeting from this point on to that point. So let's go to the weekly. So what we wanted to see on there is price bullish or bearish on the higher time frame. That's what we want to see there. So we can see it's bullish. So what we can do on this higher time frame is maybe just marking out key areas or key monthly or weekly areas. So as we can see that from here, from this point on, we have this area, this key area here, where price got 2 and 10 around. So this could be yeah, I think this could be your weekly key area. So for instance, anytime price gets into this zone and gives you any buy setup, you are more, with all confidence, want to take a trade from here. The same way, if we have a previous key area here, we want to be marking that. So this is a weekly zone that we've just put there. So we can go further to the daily time frame. So with that area, we can even further refine it to this last candle here, just to make it much clearer. Okay, so this is the daily as well. We can see that whole of last week we were on this bullish run, got to this high again. So from this high, we want to see the reaction of the markets, what will happen from here. So on the daily, we can see it's bullish. That's what we want to see from there. If you go to 4-hour time frame, the 4-hour time frame. So on the 4-hour time frame, we can identify from here that there was a push down that caused a break of structure or change of character here, because this is the first move that creates. So you have a change of character here. So the origin of this change of character was from here. So we mark that this is the origin. We have supply zone right here. So mind you, this is all-time high of NAS, all-time high of NAS. So that's a supply zone that we have there. That's a key area that we have currently. So attached to this key area, we also have imbalance attached to it that has just been filled. So it's the same three candle pattern that I was explaining area that we are identifying here. So we have this imbalance. So this is the first candle where I've marked at the supply. The second candle is the one between there, and the third candle here. So we can also see some imbalance, but all these ones has been filled. So this is where price is currently at now on NAS, this key area. So from this key area, anything can happen. Price can either push up. So we have this range here. So this is the range we look into. Let me put this. So we have this area here. So even at all, if we want to engage in any buying opportunity, this above this 50% area is all premium area, below is discount. So any buying opportunity that we want to engage in, we want price to come to the discounted area, which is the green zone here, discounted area. But from this point on, you can see that as we checked on the 3 higher time frames, all bullish. So we expect to continue this bullish run. So if we want to continue this bullish run, we expect price to maybe give us a discount to come to this discounted area before we are interested in buying. Because if you buy it here, the price is too high. So you wouldn't want to, as a good business man or woman, you want good prices for your product. So if the price is too high, you want it to be subsidized or to be reduced. So once it's too high here, you expect price to come back to a discounted area where you are more comfortable to take it. So and again, this is a very good example of my second leg entry model that I was talking about. So we had this push down causing this break of structure. So we had this trading into this area on the clearing this liquidity on the left hand side, clearing the liquidity on the left hand side, and then turning around. Wow, almost 1 hour into our session. Okay, today I plan not to stay long as we did last week, so we're going to be finishing soon. Anyway, it's the same thing that I'm going over and over again. So anytime you sit on your own chart, you can do it by yourself, identify the same thing I'm looking at, and identifying and implementing it. So we have this push down causing this impulse move and then break of structure, identifying these imbalances here. So let me take this off so that we can have it clear. So causing this imbalance here, and then we have this zone, the zone that we've marked here, it's an imbalance supply zone here. So from this point on, we can expect to take or look out for opportunities if you want to. So this will be a risky trade because on the higher time frame it's a bullish market. So if you want to take a sell from here, it's a counter trend trade, which I wouldn't advise to go into because it could be risky. It's more safer if we get back into the discount zone and then you buy it from there. So from this point on, we might have a retracement back to the, because we have this, can we see we had a break of structure here. So currently we have, okay, let's mark the break of, we have break, say this is the first move. So change of character here, we have change of character here. So after this change of character, the origin, we mark it from here. We mark the origin from this point on. Let's say from here. I want to take the last candle, but let's see how it goes out. So that's the last candle. But in the actual sense, the move, we had a pause here, a hold above the 20 moving average. So I prefer to take it from here. This is the last candle. That's, so this will be the demand zone. So attached to this is demand zone, we have this imbalance area, there. We had the price tapping into that imbalance and pushing up. Price tapped into the imbalance and pushing up, and again we have another break of structure here. From here we had another break of structure, BOS right here. So from this break of structure, where is the origin? From this break of structure, where is the origin? So we could say this is on the 4-hour time frame. So from here you can zoom in by going into the smaller time frame to get an accurate or a more precise area you are looking into. So let's say we had a hold here. So before this break happened, we had price pushing from this area. So I will say from here, where is my box? From, oops, it's not picking. Yeah. So from here, and then that should be demand area. So just looking at this most recent area and then taking action from there. So we want to see the most likely areas that the prices most might trade into if it wants to continue the uptrend. So anytime you identify that, we can also see there's an imbalance attached here. So we could have price trading back into this area. So we have a breakout structure. This is the origin. We can identify it. It's identifying it. It is also an imbalance area that's from here to here, there as well. So we could have price pushing down from there into this area, or further to come down here to clear all this there, because the imbalance here is not completely filled, it's partially filled. So we could expect price coming down to fill this and also clear the liquidity that has created here, liquidity there as well, and then filling this imbalance there. And at the same time, that will be that will be in a discount area that we marked. If we get price pushing down to this area, I think that will be in the discount area. So let's have a look at again to that. So this is the high of the range we are looking at. So we can see how if price trades back into this area, that will be in the discount area. So taking a trade from here is much better than taking a trade from the premium area. I hope that is clear enough. Yeah. Okay. So that is the take on this. Okay. We are on the 4-hour time frame, so we can further go down. Oh, we've already done an hour. Wow. Any question? Let me see if there's any question. Okay. All right. Okay. So, guys, so the same thing that I was kind of talking about earlier on. This is the first leg, second leg. So the failure, this leg was unable to beat the previous record. So once I have any of my entry models showing up here, I'm more than happy to go into the trade right from here, because I can see already this has already cleared some liquidity here and then failed to beat or come back to beat this previous record. And already I know that NAS is in a bullish run, so I wouldn't hesitate to take my trade right from here. So I wouldn't hesitate to take my trade right from there. So even there, this was the first leg, this is the second leg, this is the second leg area. So from this area, you could see how we had a imbalance created here. So that is one of my take entries models or entry signals. So we have, I want to see that there's an imbalance created as price began to push up. So this now will act as an inverted fair value gap or inverted imbalance, whichever way you want to put it. So what that means is normally when an imbalance is created, you expect price to so now when an imbalance is created, you expect price to react from there. So once this is created, we expect price to come back and then react from there. That's exactly what happened. So in a situation where price fails to stop from there or react and turn around from there and then push across it, and then once it push across it, so let me make this clear. Let me demonstrate this because I might confuse. So we have this that's that. So let's say we have some imbalance right here, some imbalance right here. We had price tapping into it. Okay, not this way. Let's see. Let's say we have imbalance right here. Yeah, we have imbalance right here, and then price was coming down. We're expecting price to react from this imbalance, from this high to here, and then push up. But this time around that didn't happen. Price broke through that area of imbalance. So, and now price came back and then tested the area. So now this is an inverted imbalance zone, or inverted fair value gap. So anytime I am in an area where I see this, it's an extra confluence, an extra confirmation for my entry. So if I see an inverted fair value gap there, that gives me more confirmation, or tells me that the direction that I want to take the trade is have a high probability. So that's one of the things I look out for. Okay, I think that's how much we can take for today. So this is on the this is on NAS. So just as I think I explained it last week, so NAS and then SPY, they more or less move together. So in a situation where you have, let's say NAS has created a lower low, and then maybe SPY or S&P 500 has created, it's not following what NAS is doing. It just tells you that, or gives you indications of what is bound to happen. So if it's going to turn around and go higher, NAS might be delaying. S&P 500 would have completed this low and then gone higher, but NAS will take its time to do the same time, complete the same pattern. So if you see that kind of thing, it's more or less a divergence. So that gives you indication that you can either take the trade on NAS, since S&P 500 has already completed that pattern and then pushing up, and NAS is yet to do that same pattern. You can take the trade on NAS as you see the indication on NAS to push higher. Okay, guys, so have I given, so yeah, so on my take on NAS, this is what we expect this coming week. They expect this coming week because it's already at this premium area. It's already filled these imbalances here. So we could expect price coming back. If we want to trade to go higher, we want some discount. We want price to come back to the discount zone as we have marked here. As it comes to this discount zone, it also fills this imbalance, tapping into the demand zone and then pushing up. So this is where we want to take a buy. If you want to take a long trade, this is from here onwards, targeting at least the previous high area. Our stop loss goes below the zone. So this is on the 1 hour time frame. So we can further refine this to give us a very, very small area of a better risk reward in terms of where we want to take the trade from. So on the 1 hour, what's it on the 1 hour? Let's see. Yeah, so on the 1 hour time frame, yeah, I think we did it on the 4 hour time frame, this markings. Yeah, we did it on the 4 hour time frame. So as we go down on this smaller time frame, we can further refine the zone that you have marked. So on this zone, let's see. Yeah, so on this zone we marked earlier on, we had a break of structure, change of character right here. So this, in effect, on the higher time frame was showing us the break, change of character. So the change of character will be down here instead, because this is the first indication area we had. This is the first, so this will be the change of character. So with this change of character on the 1 hour time frame, we can mark it, refine it to this zone. We can refine it to this zone because this is where it's actually started and got pushed up. So attached to this area, this is all balance. So we can see that the high of this candle here is here, and then the low of the third candle is here. So we have a tiny imbalance area that we can mark on here. We can mark on there, so it doesn't matter how tiny it is. Once there is an imbalance, price can be drawn to that zone. Price can be drawn to that zone. So this is so we have imbalance here again, we have liquidity here again. So we marked, this is our, we have some imbalance here as well that hasn't been filled, fully filled. Yep, it hasn't been fully filled. And then we also have this demand area here. I'll pick it from here to there. So this is all this is a demand area. Let's mark it properly. Demand. So in effect, this is all the zone that we want to be looking at. So we'll take this off, even though it's also just to make it a bit clearer. So we'll leave it as this on a 1 hour time frame. So we have an imbalance demand zone here. So with that said, we could at least expect our entry to be somewhere here. So this is what's refining your charts or your markings could help you to do. So to help you to have a better risk reward ratio. So as we come back to the discount zone, our target will be here, since we are in a bullish market. So that's one look of it. Other than that, you never know. This is one scenario that we have planned. Price could also, just from this point, push down to this zone and then continue making new highs. So there's also this possibility. So what could happen here? We have an old high here, so we could have a sweep of this liquidity, and then before it comes back to give us a better entry here. So let's watch our charts. Let's watch our watch the market and see what happens if we have a scenario, as we have the same scenario that we have planned here. We can take advantage of things as we go along the week. Okay, so with that said, I think we'll end our session here. Okay, before I go, what I used to identify a leg, just as I was explaining, first leg and then second leg. So what I use to identify a leg is anytime I have price, where is it? So creating a high. So it's also a 3 candle pattern. So over here, so this is the impulse move that caused the break of structure here, giving us the first leg. So over here we have a high point that was created here. So on this high, we have one side lower. On the left hand side, we have a low point or low. Okay, let me illustrate it with the candles here. So we have 3 candle pattern like this. Okay, so with this 3 candle pattern, to identify the leg, the beginning of the leg, so we have price trading here, and then we have this middle candle giving us a long wick like that, and then so anytime you have a scenario like this, it could be an uptrend or downtrend. That is the beginning of the leg. So if price is going up and it gives us this kind of scenario where the middle candle is higher than the 2 side candles, the left and right candle, this is the beginning of the leg, as we can see here. So from this point, we can see that price will continue pushing down from here. can see that price will continue pushing down from here to the downside, creating lower lows and then stuff. So in the same way, let's go back to the chart. So that's what I was explaining to you earlier on the charts. Explaining to you, trying to delete this off. Okay, quickly. All right, so if I zoom into this here, we can see how this candle is higher than the first candle, second candle higher than the third candle as well. So that's the beginning of the leg. Then if we go to the bottom part of the leg, we could identify the same thing. So we have this candle giving us the low point. The left hand side is lower than the middle one. The right hand side is the left hand side is higher than the middle one. The right hand side is higher than the middle one. So that is an indication to tell me that is the leg. And you can go through the charts and see most of the time if we have a turnaround, this is what you most likely will identify. Same thing we have here. First one lower than the middle one, third candle lower than the second candle, and then we had a push down. It happens over and over again. The same thing here, the same thing right here, and then so you can go through your chart and then identify most of these things. It happens all the time again. All right, guys, we've already done 1 hour 19 minutes. So I think if you have any question, just put in the chat. Other than that, we'll end our session here today, and then I hope to see you next week Sunday. Yeah, so as I said, we are here to learn. So if it's the same thing that we're doing over and over again, identifying break of structure, liquidity sweep, equal highs, equal lows, break of structure, then you go back to identify the origin, identifying imbalances along the way, and then we take it from there. So break of structure, identify imbalance or fair value gap, mark your zones, and then wait for price to come to your zone, and then you take it from there. So the same way on NAS, we've marked our zone. We are expecting price to come to this zone here for us to comfortably take the trade from here to the upside. If not, it could happen that price could break below here, but as I said, we trade what we see, only trade what we see. Yeah. Okay, so on that note, I think we'll end today's session here. Is there any question, any observation, anything you want to? Other than that, if you enjoyed the session, put some fire in the chats. Let's see bubbling in the chats if you enjoyed the session. And then you can also invite others to come and be blessed with this kind of training or sessions as we go on every week. And if you are here, you haven't subscribed to the channel, make sure you click the subscription button and also the notification, and then put in some likes. Right, okay, thank you so much for joining me here today. Hope to catch up with you next week. Until then, have a great trading week. By the way, we are in August, and August is mostly a time that most traders or the big players are on holiday. So you find that most of the pairs might be consolidating or moving sideways, not giving a very clear upward direction or downward direction. So anytime you find that you enter a nice setup and it's not moving, just know what time we are in. All right, thank you, and catch up with you next week. Bye. Have a great week.